Great. All right. I think we have a pretty good audience going. So we will get started. So thank you. Welcome, everyone. Thank you for joining today. Our focus today is the world of emission factors for use in Scope 3 greenhouse gas accounting and reporting. As businesses strive to meet ambitious net zero goals and report emissions with new levels of accuracy demanded in evolving regulations, the quality of the data we rely on to calculate Scope 3 emissions remains a critical question. At the core of this challenge lies the concept of emission factors, the essential building blocks for accurate inventory reporting and credible climate claims, especially in Scope 3. Companies are investing heavily in building more specific and reliable emission factors to use in their Scope 3 calculations. But our core question today is, how do you ensure these factors are reliable? Today, in this webinar, we'll demystify emission factors a bit, explore their role in corporate emissions accounting, and highlight the importance of verifying this data for credible Scope 3 reporting. I'm excited to be joined today by representatives from SustainCERT's team, and as well as with Indigo Ag. We'll both be presenting a pioneering case study that we worked on together. Today, you're going to learn a little bit about how SustainCERT and Indigo Ag successfully verified an agricultural Scope 3 emission factor and why this matters for sustainability leadership. I have the pleasure to be joined by two members of the Indigo Ag team, Ryan Jones, the Senior Director of Sustainability Solutions at Indigo Ag, as well as Alice Chang, the Senior Manager of Sustainability Standards. And then with me from SustainCERT is Hank Harmison, our Principal Climate Scientist. I am Thomas Blackburn, the Vice President of Sales and Partnerships at SustainCERT. I'm going to be your host today and leading today's discussion, and in a few minutes with these three experts. On our agenda today, more specifically, we'll start by giving you a little bit of the context around emission factors, why they're important for accurate inventory accounting and credible claims. And then we'll hear more from Indigo Ag on their case study, how they're working on developing emission factors in agriculture. And then we'll have a follow-up discussion with Ryan, Alice, and Hank. We will open up the floor at the end to any questions that you may have. In the meantime, a couple of quick housekeeping points. Please be aware that this webinar is being recorded, so any contributions you do make will be recorded and posted on our YouTube channel. For the Q&A later, please feel free to post any questions you have in the chat in the Q&A function. If you experience any technical difficulties, please feel free to send us messages via the chat box. My colleague Leah is there who will help you troubleshoot anything that you're experiencing. And then lastly, we will make a recording of this webinar available with all the participants after the session. So a quick note on SustainCERT, who is bringing you this webinar today. If you're not familiar with us, I'll just give you this quick intro. We are an ISO accredited climate verification and certification company. We work on bringing credibility to the carbon market as well as corporate value chain greenhouse gas accounting. We were founded about 6 years ago with the mission to scale credible climate action by bringing digital solutions to our verification services. We aim to make them more accurate, transparent, and simple with digital technology. In our work in Scope 3, in our value chain emissions work, or corporate indirect value chain emissions, SustainCERT offers verification services for Scope 3 reduction and removal interventions. As part of today's topic, we're really excited because we are actually announcing with this webinar the extension of our services and the offering of emissions factor verification to ensure that Scope 3 emissions reported by companies are accurate. Our services aim to, really enhance data credibility, align and make sure that any information you're using is aligned with GHG protocol standards, which are also being pointed to by emerging CSRD as well as IFRS standards. So, SustainCERT, coming back to us, we're acting as the layer of credibility in Scope 3 to help scale collaboration and co-investment in value chain action. It's worth mentioning that SustainCERT is also the Secretariat of the Value Change Initiative. The Value Change Initiative is a multi-stakeholder group of more than 100 entities that brings together civil society, some of the world's largest food companies, food, beverage, and agricultural companies, as well as apparel and other internationally recognized climate standards to identify practical Scope 3 emission accounting solutions that scale. So with that quick introduction, why are we here today? Why are we speaking about emission factors and what are they? Just a quick introduction to emission factors. Scope 3 emissions or value chain emissions are all of the emissions that are associated with emissions from goods and services that are not in a company's direct control. These are often referred to as indirect emissions, and there are 15 categories of Scope 3 emissions, ranging from purchased goods, business travel, investment, and use of sold products. Scope 3 emissions under Greenhouse Gas Protocol Scope 3 standard must be reported annually. And that becomes important for a number of reasons that we'll get into in a bit. Because these emissions are generated typically by other companies or entities in a value chain, it can be difficult for the reporting entity to assess the accuracy of the information they have and get that information on an annual basis regarding the goods and services that they either purchase or sell, etc. This is where emission factors come in, right? Emission factors represented as the emissions intensity of an activity, process, good, are represented as the emissions intensity of an activity, process, good, or service. Companies typically use emission factors to estimate their Scope 3 emissions, and companies may use various methods to compile their Scope 3 emissions. But the most popular path is to aggregate company activity, either purchases that they're making, sales data that they have, this primary information that's at the company's fingertips, and then multiply that by these emissions factors or emissions intensity numbers from external databases. And that results in a corporate Scope 3 inventory. Some of the most the companies often search for the most relevant emission factors to use. There are databases that exist out there. Some of them are spin-based all the way to particular goods or services within a region. Popular databases include EcoInvent, the World Food Database, US EPA publishes them, as well as the UK's DEFRA, or Environmental Agency. One of the challenges with these databases is that they're typically not updated annually, and they may cover a very large geographic area. For example, in agricultural emissions, an EcoInvent emission factor may be wheat at the farm gate in the United States, right? So it covers a really large area. It's not necessarily specifically time-bound either. So while companies have increasing scrutiny on their greenhouse gas emissions reporting by emerging regulatory frameworks and also, really wanting to pin down how to reduce these emissions, companies are looking at getting more accurate, relevant, and real-time, meaning annual updates to those emission factors to ensure their inventories are accurate and relevant and show the results of any investments that they're making into reductions and removals in their supply chain. So we need to take a big leap forward, right, in terms of the information that's available to us. New digital and remote sensing solutions are bringing this closer to a reality, and yet companies also need to be sure that these new approaches align with best practice for data collection, quantification, and reporting required by Greenhouse Gas Protocol, as well as their Scope 3 standard, as well as the emerging land sector and removals guidance. So this is why SustainCERT is working with clients now to verify emission factors. There's new sources of them. There's new entities that are supplying these. And so our verification services can help companies ensure that their emissions data follows Greenhouse Gas Protocol best practice and rules from the emerging land sector removals guidance. It can also help a company differentiate from competitors by showing customers and stakeholders the emissions intensity of their goods and services with accuracy and credibility. It also can de-risk reporting for compliance and ensure results are consistent and comparable over time, which can also help you to support your decarbonization strategy, help you show progress towards targets. Meanwhile, service providers like Indigo Ag that we have here today, it also helps to demonstrate that the method they're using for calculating an emission factor will result in an accurate output that a customer can use and support further investment into collecting this data, getting this data, but also what we all want, which is climate action. Here today is my colleague, Hank Harmison. He's here to tell us a little bit more about the various types of emission factors and the quality criteria that are important for an accurate, relevant emission factor when SustainCERT provides assurance. Hank, do you want to speak a little bit about some of the types of emission factors that are out there, and what are some of the quality criteria that companies look for when they're looking at emission factors?
Sure. Thank you, Thomas. Good morning, good afternoon, good evening to you all. So an emission factor is an amount of greenhouse gas per 1 unit of activity data. So the activity data must always exactly match with the scope of the emission factor. Now, these emission factors can be sliced and diced over many categories. You actually have to when you report greenhouse gas emissions. The most used standard is the GHG protocol, which has scope 1, 2, and 3 emission categories. Emission factors for scope 1 are the easiest to get. You often get them from IPCC or other standard databases. For scope 2, imported energy, you can maybe have something in your power purchase agreement or purchase the International Energy Agency emission factor database. But the most important chunk of emissions in your inventory is scope 3, often larger than scope 2 and scope 1. And up to recently, reporting was voluntary, and not all categories have to be reported. These emission factors are hardest to get, and often people use general emission factor databases like EcoInvent that Thomas was referring to. These are secondary data, and the problem with these databases is that they're fairly necessarily general. So the uncertainty range is big, and that is something that you increasingly do not want. An extra element now in all this is the Land Sector and Removals Guidance, who introduces about 20 more emission categories on top of the 15 that we already have. And so we have now 35 potential scope 3 categories for which we need emission factors. And so often for a commodity, you have a set of emission factors, not just one emission factor. So now what companies want is, now we see two groups in our clients. We have clients that develop emission factors and want to make sure that these are reliable. And we also have clients that feel the necessity to engage with their value chain. So upstream suppliers have a carbon intensity and emission factor. You want to know what that is, whether it's high, whether you can help them to decrease it. And we also have clients that say, we see this as a large category. We want to reduce the uncertainty range of these emission factors. And so in assurance, what we do with these clients in terms of looking at their emission factors is checking whether these emission factors are materially correct, whether they follow the calculation steps correctly, and whether it conforms with the criteria. In most cases, the GHG protocol, and sometimes the ISO standard that has been derived from it. And the important element in it is that the GHG protocol is a framework that you can apply in many different ways. The companies have to therefore develop a sort of a standard, a protocol that explains to us how exactly they apply that protocol, the GHG protocol. Otherwise, we're not able to follow the calculation from input to finally the emission factors. In terms of quality criteria, we have two groups, so to speak. The first group is the general principles of the GG protocol and the ISO standard, which is relevance, completeness, consistency, transparency, and accuracy. So relevance is, of course, is the calculation covering something that is directly related to the product or commodity that we're looking at. Completeness, does it include all the sources and sinks that are relevant? Consistency, do we use the same methodology year on year? Because if there is a big change, we might have to do a baseline recalculation. And transparency is, do we understand how this emission factor has been calculated? For accuracy, you want to make sure that there's no systematic bias and that uncertainty is reduced as much as possible. So that is one group, the general principles of the GG protocol. By the way, the GG protocol is being revised at the moment. We have two SustainCERT people taking part in that revision, and I'm one of them. The second group is the inventory requirements of the GG protocol, because what you are required to do is not just to produce an emission inventory or an emission factor. You are also responsible for the internal checks and balances that are put into place. And during our assurance process, we rely heavily on those internal checks and balances, which we check during the assurance engagement. So I think that completes the general overview, Thomas, of emission factors and their assurance.
Okay, great. Thanks for giving us that quick intro to the various types, as well as what we look for and how we engage with customers. Next, it would be great if we worked on this process essentially, and actually what Hank just outlined. Indigo Ag presented their method to us, laid out how they comply with GHG protocol to us, and we were able to run through an assurance with Indigo Ag and provide assurance around their emission factor. So I think, Ryan, if you want to introduce Indigo Ag, and then we can also dive a little bit more into the specific emission factor that we were looking at with you all, and how you are currently calculating that emission factor. Yeah?
Yeah, happy to. Appreciate the introduction here. It's nice to meet you all. I know we're already pretty deep in the weeds in terms of emission factors and how Scope 3 accounting works, but just for a little bit of a high level set on what Indigo Ag does, our mission is to help farmers in the agricultural value chain sustainably feed, fuel, and clothe the planet. And we do this most typically by running regenerative agricultural projects where we can make reductions and improvements in the value and then pass that on through the supply chain or to actors who are interested in that investment. Through that process and through running these programs over the years, we've really learned that trust and transparency are critical for us to ensure a collaborative environment. Often, I think folks would relate to this. It can feel like you're working on this on your own, when in reality, this is one of the most interconnected value chain systems that we have. And so layering in this additional idea of not just an emission factor, but one that's been verified and has this seal of approval to an aligned standard body was something that we've been really eager to pursue as a company that can help ensure quality across our customers and our partners, but really ensure that the work that we're doing is in fact science-based and is aligned with what is needed for action. And so for us, it's been a great process to pull this together and work in collaboration with SustainCERT to understand how can we verify this and provide that rigor that is necessary for collaborative action. So I'll pass to my colleague Alice, who is the lead for us on all things Scope 3 policy and was critical in helping us get this through verification, to talk through a bit more of the work that we did.
Thanks, Ryan. Yeah, so I want to take the next few slides to give a bit of an overview on what we did in this case study and talk you through how we quantify our emission factors, as well as touch on why we chose to pursue verification of this project outcome. So this was a project where we had the opportunity to work with a food and ag company to conduct an assessment of the emissions associated with production of corn in that company's US supply chain over the 2023 agronomic year. The outcome of the project was a cradle to farm gate emission factor representing the weighted average emissions intensity of corn production in their company-specific US supply chain. So the first step in this process was to define the supply shed of the reporting company. In this case, the reporting company provided us with data on their corn procurement in the US, including a full list of vendors that they purchase corn from directly, as well as those vendors' respective procurement volumes. We use that information to map out 7 sourcing areas, which represent the full draw area for all of the reporting company's US-based vendors. 6 of these sourcing areas were defined at the state level, and 1 was defined at the sourcing region level. The graphic here is for illustrative purposes only. It's not specific to this case study, but wanted to show an example of what that sourcing supply shed could look like. We then quantified, once we define the relevant sourcing area for the company, we can then quantify emission factors for each of the sourcing areas that were identified, where the emission factor represents the average intensity of corn production in that sourcing area in 2023. Ultimately, we then use the procurement volumes from the reporting company to generate that weighted average company-specific US corn emission factor. If you go to the next slide. So the emission factors that we generate are cradle to farm gate emission factors. This includes all of the emission sources associated with production of corn, including upstream emissions from producing inputs like fertilizers, as well as on-field emissions associated with sources such as soil carbon and combustion of fossil fuels and machinery, and so on. At the heart of our quantification methodology are 3 different models. The first is our greenhouse gas inventory model, or GIM, which is an inventory-based greenhouse gas emissions calculator, which we developed, which is utilized to quantify the non-land and upstream emissions associated with agricultural production, which you can see in the graphic here. The second model is SustainCERT, which is our process-based biogeochemical model that simulates cycles of carbon and nitrogen in agroecosystems, which is utilized to quantify land management net CO2 emissions and removals, in this case, soil organic carbon emissions. This model has been calibrated, validated, and reviewed by independent experts. And finally, we utilize IPCC default equations to capture all other emission sources, such as direct and indirect N2O emissions from organic fertilizers and CO2 emissions from lime and urea applications. When you take these models in combination, plus our land use change calculator, it captures the full cradle to farm gate emissions associated with production of corn. Next slide. So in order to quantify emissions at scale across the US, what we do is actually, or what we did is develop emulator models which approximate the dynamics of the target models that I just described, but they do so at a much lower data burden. The emulator models which we developed are trained to predict emissions at the field level, utilizing the wealth of primary management data that Indigo has collected from growers through its carbon offset program, in combination with publicly available data sources that capture weather, soil, and management practice dynamics via satellite imagery. The emulator models allow us to produce field-level emissions estimates for any field in the US, which can then be viewed in our Field Explorer tool. Field boundaries are auto-delineated, based on a deep learning model, and that tool allows us to define distinct areas of agricultural management to ensure, for example, that the fields included in our assessment are only the fields that are producing corn in that year. Using the emulator models, we estimated cradle-to-farm gate emissions associated with production of corn on every field within the sourcing areas that we identified. The emissions within the sourcing area are then summed across all of those fields, and total emissions are then divided by the total bushels of corn that were produced in that sourcing area. That gives us the emissions factor for the sourcing area in terms of CO2 equivalents per bushel of corn. Next slide, please. We report out our emission factors in alignment with the Greenhouse Gas Protocol's draft land sector and removals guidance, ensuring that we capture all of the categories that have been introduced in that draft land sector and removals guidance. Again, the graphic here is a generic example, not specific to this case study, but you can see that in the emissions report, we disaggregate emissions by category. So land use change, non-land emissions, land non-CO2 emissions, land management net CO2 emissions, and land management net CO2 removals. Removals here are indicative only. We do provide this estimate to companies to help them to understand potential for removals, but as the guidance on removals requirements is in an interim state, those removals are not included in the emission factor that is used in the inventory and was outside the scope of verification in this case study. We show this view for each of the different sourcing areas, and then the final step in quantification is to calculate a weighted average of the 7 sourcing area emission factors, utilizing those procurement volumes that we receive from the reporting company. And this US level corn emission factor that is specific to the company and to the year is the outcome that we then decided to have verified with SustainCERT. Next slide. We decided to move forward with verification of the emission factor for a few reasons, some of which have been touched upon by other speakers already. First, we wanted to build confidence in our methodology and project outcomes. There's just been a lot of noise in the market, and companies really want to know that the projects they invest in are aligned to the relevant standards and are of high quality. And we felt that verification could provide and build on that confidence. Second, we do have some customers who have auditing needs already, and if our emission factors are verified, it can save those companies the headache of needing to have back and forth with their auditor since the emission factor already has a stamp of approval. And finally, although verification of Scope 3 emissions currently is not required, there are upcoming regulations on disclosure where verification will become more of a norm, and going through verification once allows us to really understand this process and to be verification ready in the future. We therefore decided to work with SustainCERT to complete a first of its kind verification of an agricultural cradle-to-farm gate emission factor, and chose to pursue verification at a limited level of assurance and to seek verification against the Greenhouse Gas Protocol's suite of standards, and in particular against the draft land sector and removals guidance. We chose to do that given how critical GHGP alignment is for companies, particularly as they look to track progress against their science-based targets. Through the verification process, and I'm sure we'll get into this a bit more soon, but SustainCERT checked Indigo's data inputs, methodology, internal QA/QC processes, etc., against requirements in the GHG protocol suite of standards and guidance through an iterative process. In the end, their assessment concluded that Indigo successfully has met these standards for limited assurance of the project emission factor, and the outputs of that verification were the verification report and verification statement, and you can see the verbatim verification outcome stated on this page. That's all for my slides, but we'll definitely have a chance to talk through some more of the details in our discussion.
Yeah, thanks so much, Alice. I think it's a really detailed overview of the work that you all have done. One quick question for you is, how did you pick this emission factor? Why did you start here? Was that really a coincidence of events and demand that you were seeing, or did you feel like this was a strategic choice of, Midwest corn for you all to look at?
Yeah, it's a great question. So the reporting company we had worked with for this case study previously had been using a default emission factor for their US corn emissions. Corn is a major hotspot in their footprint. So quantifying the supplier-specific corn emission factor helped us to improve the accuracy of their inventory, identify opportunities for improvements, etc. They had previously indicated an interest in verification. We've been hearing that interest across the board from different companies, so it's been more and more on Indigo's radar to start to navigate that process to see what it would look like, what the timeline would be, what the cost would be, what documentation do we need to have ready.
Yeah.
And this was really an ideal opportunity because the corporate partner had an interest in it, but they also had flexibility where we didn't have a specific deadline that we needed to finish verification by. So there was a little bit of space for us to really navigate the process and give it its due diligence to map out what that process would look like and also provide value to the corporate client.
And I think, it was it's an excellent opportunity. I think also with the pressures of timeline there for us to work together on this, because this is sort of the first time that SustainCERT is going through this process as well, and now launching this into a service with us as well. So maybe Hank, I'm going to turn to you really quickly. Could just given the detail that's been provided here, maybe from SustainCERT's side, what did that verification process, timeline, criteria, what were some of the key steps, and how did that go? How long did it take? Could you give us a little bit more detail from the SustainCERT side as well? You are muted, so.
Thank you.
All right.
Now, first we have a methodology, a standard. There's an ISO standard for verification of GHG information. That's 14064 part 3. We found it to be pretty general, too general to do this sort of work. So we have been doing a lot of development on this. In terms of the project itself, it was a really nice challenge because Indigo has developed an emission factor methodology that squeezes every last bit out of the available information which they have, and the tools that they have really cutting edge. The first step is always, how exactly did you apply the GHG protocol? Because the GHG protocol in itself is too general. It doesn't help you to do a verification, and so Indigo has developed their documentation on this. We first had to get a general understanding of how everything worked. Alice gave a short and sweet introduction, but it was really a machinery. And we are, as verifiers, also very interested in the internal checks and balances or internal controls that have been put into place, because to a large extent we rely on that. If we see quality checks working, we know that the sample we have to take can be relatively small, given that this is a limited level of assurance. Then, once that methodology has been fleshed out, you develop an audit plan in which what sort of sample do we need, what sort of things do we have to look at, and what has already been checked. As what Alice referred to was the DayCent model that has been peer-reviewed and checked, and therefore we don't need to do that again. So we adjust our scope accordingly. Then you have to perform the audit. That is in this day and age done with interviews that are that are remotely that via Zoom or Teams or whatnot. And then SustainCERT has shown to us exactly where they get the data from and how that flows through the system, from input to the emission factor and through the different internal checks which they have put into place. So once all that has been finished, you have findings. It can be an observation, it can be a corrective action request. It can relate to the applicability of certain emission factor categories, or it can be something that would be good to improve in the future. So once you come to a conclusion, we report. Report is the statement that is shown on the screen. And it's also a letter to the management in which we say, well, these are the most salient points that we found, and these are the most important things which you might want to improve in the future. This whole process took a few months. It took altogether, I think, 4 months, because this documentation was available, but had to be made available in a form that was useful for us for verification. And so altogether, if this is standardized, it can be done much quicker. And that is a question about scaling that we might discuss later.
All right, great. I'm just going to unshare my screen here. We'll just enter a little bit more into some questions and some answer. So I think, it's really interesting to see those results. And I guess, coming back to you, Ryan, what did you, in this verification process, did this was it additive to Indigo's process? Do you feel like this resulted in some changes for you all? What's your overall sentiment around that result and the value it added to Indigo's process?
Yeah. I think there's a couple different lenses here. The first is that in going through this process, we were ensuring that we had that alignment with GHGP, which required us to break it out into that long list of various sources of emissions, which provided some transparency, but also provided more nuance in how we could think about approaching a broader engagement or a broader solution. There's a question, I think, in here at one point about the use of soil samples, and Indigo has hundreds of thousands of soil samples that we can use to initialize our models and leverage that for really high quality data. But one of the key outcomes that we were looking at was, what is the mitigation opportunity around removals? If you look at the naturally recurring removals based on the sourcing area that they're working in, and how does that compare to the opportunity, for example, to abate soil carbon emissions? And that level of specificity and program design was brought out because we laid this out in such a transparent way and had all of the emission sources broken down. So that would be one area where I think maybe a couple of years ago we wouldn't have had that sort of insight so readily available, but became much more apparent when we took this process. The second is, as we're working towards this alignment, it's just helpful to have a thought partner to engage with and discuss with and ensure that we're interpreting this the right way, that we're building it the right way, that it is something that will be repeatable and usable by multiple partners. I think for many of the partners we work within the ag value chain, they're looking for ways to co-invest with the other members of their supply chains or the other members of their value chain. And having more consistency in what the outcomes are and how it can be used in their reporting, since many of them have shared SBTs or aligned SBTs, this is a way that they can ensure that what's being generated does meet that standard. And we've partnered with someone who really understands what that needs to be. So those are two things that felt additive and made what we were able to do more collaborative, and in that way just a stronger project to build off of. We touched on timelines a little bit too, just in terms of things that add to it as well. I think this first go around was one where, we had to learn that together, but moving forward, I think we've gone through this process effectively enough to know that this can be something that is scalable, repeatable, and done on a timeline that meets the reporting needs of the companies that are out there requesting this. So that was a nice piece to learn in this process, that this is a manageable add to bring this additional level of value to any of these projects.
Right. And meeting that complexity that's required in LSRG, right? I mean, Atlas is laying out all the various reporting types, right? Land use, like all the different categories that need to be displayed there. And I think that that's, it's really interesting to see that that can be done potentially at scale. And, we can do that in a relatively short period of time. Hank, I think, just on this question of scalability, since we're here, from SustainCERT's side, are there ways that we could potentially speed up that process of 4 months moving forward?
Sure. I mean, we have seen that a company which has to implement a GG protocol needs to have some sort of an idea what we're looking for, how exactly they apply the GG protocol, and we have been developing templates for this to simplify their life. Secondly, Indigo has developed this methodology, and multiple commodities or multiple emission factors will be calculated where the data flow goes through the same pathways. And it would be good to perform a validation on that common part of the whole machinery and say, well, this is now something that we don't need to check from start to finish when we do another emission factor. That would really help to scale.
And I think that speaks back to you, Alice, and a question in the chat as well. Will you be able to incorporate other crops such as soybean, cotton using the same model? And that speaks to the scalability question that we have as well, right?
Yeah, absolutely. And I think Ryan can maybe speak to that a bit more, but absolutely, we can use this same approach with other crops as well. Ryan, I don't know if you want to add more specifics.
Yeah, actually, you listed 2 crops that are readily available for us to work within with soybeans and cotton, and most major U.S. row crops. We would have the data necessary to power these models in a rigorous way.
Okay. Switching gears a little bit, I mean, I think, it's interesting to think about how we scale this, et cetera. I mean, in the results that you all are getting, curious to hear, because again, as we were pointing out at the beginning of this, a lot of these emission factors that companies have been using are things from the World Food Database, other databases, EcoInvent, et cetera, the company's been using for a long time. Those are quite static, right? And often not as granular as the work that you all are doing, right? So I'm curious to hear, are you seeing large variability between what typical databases are showing and the results that you all are getting? Yeah.
Yes, the main variability we see is geographic variability. So on the whole, on the average, it might not be that different if you're looking at a country level or a continental level for production of a commodity. But then if you start to narrow into the areas in which companies are actually supplying from and tying this to their procurement, there's tremendous variability. And you can see that if you were to just even like pick the state of Kansas, for example, and look at the variability in not only emissions associated with production from east to west, but even more importantly, the amount of impact that can be had by adopting regenerative agricultural practices. It's incredible, 2-3x variation from one side of the state to the other. And a lot of that has to do with the production system, use of irrigation, other pieces. But it's important for a company to understand as they're affecting change in these supply chains, the ways in which they can maximize that impact or tailor these projects for the sake of the ag climate that they're working in. It wouldn't make sense for you to invest in a project that's solely built around removals in really northern climates where it's hard to generate removals. There's high reversal risk, versus there are other areas where it'd be really well suited for these projects. So that's been a really fascinating piece of this too, as we get a bit more specific about, well, what are the emissions associated with your procurement, not just emissions on the whole. It derives insights so that you can be more strategic with the ways that you make investments in these value chains, improving resiliency, but also improving the emissions and carbon sequestered.
Yeah. And so I think that, given that, how do you feel that this approach helps drive more accurate decarbonization plans, right? We speak to a little bit, there are popular sort of insetting programs out there, right? SustainCERT, we verify interventions and value chains, right? And oftentimes that information is then plugged back into inventory information, taking a strict sort of inventory emission factor approach. Why did you take that approach in this program, and what do you see as the sort of benefits of that? Yeah.
Was that one for me or Alice? Sorry.
Either one, yeah.
Either one.
Alice, do you want to take that one?
Yeah, I can speak to the sort of benefits and challenges of taking an emission factor approach. But sorry, was that the question, Thomas?
Yes, it was. Yeah.
Okay. Yeah, so we've chosen to really align with greenhouse gas protocol across all of our programs and to make sure that we're taking this inventory approach. I know there's been a lot of discussion in the space around insetting and what does that mean and how do we set these programs up. We wanted to take this approach of using inventory accounting for a couple of reasons, including claimability and just aligning to best practice and to that effect, I mean, GHGP requires that companies use an inventory accounting approach for any outcomes that are claimed within their physical inventory. So if a company had invested in a project where, outcomes were being calculated as a credit using an intervention accounting approach, they wouldn't be able to just take that credit and subtract it from the value of their inventory, for example. Whereas in this case, the emission factor can be plugged directly into the inventory, and that can help the company to track progress over time and to report on progress against any science-based targets they might have. So yeah, two major benefits there, just being claimability and alignment to best practice. The emission factors are also really fit for purpose in tracking change towards targets which are set on an absolute basis. So if we say we need to reduce emissions by 50% by 2030, for example, that change is respective to a temporal baseline rather than sort of a hypothetical counterfactual baseline. So taking this approach of an emission factor really removes the speculation associated with counterfactuals, which we know have been the subject of backlash and a lot of discussion in the offsetting space. In the context of our impact programs, though, where we're actually working on the ground with growers and where companies are investing in low carbon practices, there are, of course, a few challenges associated with this approach, and that are often discussed in the value change initiative, for example. One is that agricultural emissions can fluctuate in response to management decisions in response to nature, weather, etc. So it's possible to see those fluctuations in carbon intensity from year to year, even if the project fields are doing better than they would have without the project in that year. And that's why, to address that challenge in our impact programs, we actually do provide companies with both the inventory outcome, which is the emission factor, as well as an intervention outcome, which represents sort of the impact of the program, which they can then use separately for decision-making and communication purposes. So we really find value to both pieces of information, but the emission factor is really what allows companies to claim outcomes and to accurately track progress in their inventories. Sorry, I hope that answered your question.
No, yeah, I think it's good. I mean, I think there's, it's a balance, right? And I think this is one that we often talk about, which is one where, with a more regional or supply shed, emission factor, the impacts that you have on an individual farm may not be as obvious, right? In the data that you ultimately get. Whereas, when you're driving those specific pieces with interventions, you get a very clear understanding, like, per field of the impact that you've had. Obviously, that shows up here as well, but, in the overall accounting, there's just different approaches and how that works. Great. I'm going to go to some of the questions in the chat because we do have quite a few. So could you speak a little bit to how farmers are engaged in this program?
Yeah, so I think this is actually one of the really powerful parts of how this project is set up is, and we've heard this as feedback from a lot of different partners that are out there, as well as farmers, is oftentimes the projects aren't designed in a way that makes sense for a farmer's operation, right? Where it's really focused on a specific set of practices or things that might be challenging for them to implement or they've already implemented, and they're not sure how they can best participate. And so this was one step of a multi-step process and larger project, multi-year engagement, where we understood, well, what are the predominant and prevailing practices of the regions that you're sourcing from? What are the practices that are going to be the most impactful for this area? Which ones do we think can be adopted, right? Like working with local agronomists to understand the potential adoption curve and the cost to implement. So this was step one of a multi-step process, again, to ensure that what was then recommended and endorsed by the companies and then incentivized by the company for farmers to adopt these practices was really impactful and met the farmer where they're at. So I think it's one of the best things we can do, is ensuring that we're not coming in and just saying, oh, go do this thing because we think it's good. We're really trying to take all of the local context of this specific value chain to the table and say, here's what we think could potentially lead to impact of these options. Farmer, what would you like to do to participate in this? And yes, here's an incentive to be encouraged to participate, share data, and continue the process. So that's an area that I'm really excited about, how this continues to improve projects going forward.
Okay. Alice, I think there's a couple of questions for you. You spoke to removals a little bit. Can removals be added to the emission factors, and would flag guidance maybe change that?
Yeah, so right now the land sector and removals guidance is in draft form, and that is the standard from the Greenhouse Gas Protocol that would give companies a pathway to include removals in their inventory, which hasn't been accessible to date. So we know from that draft guidance and through Indigo's own participation in the technical working group for that process, that removals will be allowed to be included in the inventory, but there are a number of requirements that need to be met in order to do that, to mitigate against any risk of reversal. So those requirements include things like monitoring for reversals, soil sampling, quantifying uncertainty, etc. And at this time, those requirements are in flux, so we've chosen not to include the removals in the emission factor at this time, but to provide the estimate for informational purposes so that the company can understand what is the potential for removals here. But once that guidance is finalized, which we're expecting it to be finalized in Q1 of 2025, Indigo is ready to meet those requirements wherever they land. We have experience doing that for our carbon offset program, which is built on soil carbon sequestration. So we have experience with soil sampling, with buffer pools, with monitoring, et cetera, and we can bring that into the scope 3 space. But right now it's really up to that guidance. And absolutely, those removals will be important for companies with SBTI flag targets. There's an expectation removals are built into the mitigation pathway and into the ambition that SBTI has set for companies in the flag sector. I think it's around a third of mitigation potential is expected to come from removals. So it absolutely will be important for companies in this space.
Yeah, and I think with some of the information you all are generating, it's going to be even clearer where the potential for those removals exist, right? Yeah.
Absolutely.
All right. I think there was another question on sources, but I don't see it anymore in the chat. So I don't know if you had already read it.
I can speak a bit to that. I think I see one on data. Sorry if I miss others, but just a question around what data we collected and how did we collect it, as well as the machine learning model. We use both primary and secondary data in our quantification. The emulator models are trained on the primary agricultural management data that we collect in our carbon offset program. So in our offset program, we engage directly with growers across the country to collect primary data on things like tillage practices, fertilizer rates, and application of timing, cover crop usage, etc. And that all feeds into the training of the emulator model. That includes both project year data as well as historic management data. And then we also then pull from secondary data sources that are used in support to inform the model emulators, such as remote sensing, GSRGO, USDA NAS data, etc. So we use those sources of information in combination. And a lot of those secondary data sources are publicly available. The machine learning model, I'm not an expert in this, but our data science people are not on the line, but I think it was a random forest algorithm that we used, which to my understanding is a popular machine learning model.
All right.
It was. Yeah.
Thank you, Hank. Yeah.
Hank should know. Okay. Well, we just have a few minutes left. Maybe what I'll do now is just say, just a quick recap. What could you do with verified emission factors, right? Overall, these are aiming to, strengthen Scope 3 reporting and manage risk. That means, the verification process can ensure your emission factors align with GHG protocol standards, emerging IFRS, as well as the new EU CSDDD, looking at suppliers as well, and making it easier to integrate verified data into Scope 3 inventory, right? And I think this is a really interesting example of, an organization like Indigo Ag that has done work to navigate the complexity of the land sector removals guidance, lay that out in their protocol, and then go through an assurance around with SustainCERT around the ability to deliver on what LSRG is currently asking for. I think overall that information can be taken to build trust, right? Using verified location-specific emission factors demonstrates transparency, increases credibility, and again reduces risk of reputational damage. It also increases the value, potentially helping organizations to justify either premium pricing for goods with lower emission factors or presenting verified data that ultimately others in the supply chain will find valuable as they go through their decarbonization journey. So I think, maybe just in 1 minute, Ryan, do you have any sort of call to action or key takeaways from Indigo's side that you wanted to share?
Yeah, I think as we piloted this, we ran this initially with a company that was leading in the space and really trying to understand how can we continue to provide more rigor and again hit at this point of enabling collaboration with the rest of the value chain. And that's what I would encourage companies to consider as part of this, as a mechanism that you can use to provide more transparency and more replicability in the work that you're doing with other actors in the value chain. So consider this as a lens to bring that rigor quality up and ensure that we can work together on it.
All right. Thank you so much for joining us today. Thank you, Alice, Ryan, Hank, for your participation and sharing your insights. The recording, again, is going to be available with you all in a follow-up email, and it's going to be also on our YouTube channel. Feel free to reach out to any of us with questions, and yeah, respond to our follow-up email if you have those as well. Thank you all so much, and look forward to the next discussion with you guys in the future. All right.
Thanks, Thomas.
Thank you again. Thanks, everyone. Have a good day.
Thanks, everyone. Bye.